Before we get into the episode, a quick reminder that this podcast is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. If you are enjoying Onramp media content, please like, subscribe, and share, as it goes a long way in helping others find the signal through the noise. Now for a word from Onramp. Onramp is a Bitcoin asset management platform built on multi-institution custody, leveraging our partnership with BitGo and their 10-plus year track record in securing assets, and CoinCover, the premier digital asset risk mitigation company. Onramp's multi-institution custody is a segregated, institutional-grade vault, requiring 2 of 3 institutions at any point in time to sign once a client's unique permissions have been met. At Onramp, we understand that your Bitcoin journey is a multi-generational pursuit, catalyzed by the ideals of perseverance, aspiration, and legacy. That's why we're proud to introduce Onramp Heritage, a suite of private client services dedicated to ensuring your Bitcoin legacy is preserved and passed on, embodying the true essence of wealth that goes beyond mere numbers. If you would like to learn more, please schedule a consultation. As we prepare for the Bitcoin halving and the next wave of global adoption of this nascent and growing asset class, we are halving all annual maintenance fees for clients that secure their wealth before the next Bitcoin epoch.
Let's be clear, Bitcoin is an international asset.
We are spending like drunken sailors.
Bitcoin is the only economic entity where the supply is unaffected by the demand.
If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable.
Hello, my name is Andy Edstrom, and I'm happy to welcome you to the 4th episode of Scarce Assets, a show that examines scarcity, the most fundamental driver of economics and markets, and the scarcest asset of all, which is Bitcoin. Today, I'm delighted to be here with my co-host, Jesse Myers, and our guests, the brilliant Pierre and Morgen Rochard. Now, I have the pleasure of saying a few things about Pierre and Morgen. Morgen may be the most knowledgeable financial planner that I know, and she's demonstrated this with proof of work in the form of her book, The Personal Finance Quick Start Guide. Now, I've read the book twice, and I've learned a lot from it. It's comprehensive, it's well-written, and it's full of useful information for anyone who has any assets, which hopefully is everyone listening right now. I know she's also working on another book, which I'm sure we'll talk about. And of course, she runs Origin Wealth Advisors, which is an independent fee-only registered investment advisor. Okay, now I get to talk about Pierre. Pierre is frankly legendary in the Bitcoin space, and he's one of my absolute favorite Bitcoin educators. He runs the Bitcoin is Saving Twitter account, which has hundreds of thousands of followers, and he and his friend Michael Goldstein co-host the Noted podcast, which is one of my personal favorites. Pierre's been helping people learn about Bitcoin for many years, and today he's the VP of Research at Riot Platforms, which is a large publicly traded Bitcoin mining company. And disclosure, I'm a shareholder. Now, I also want to mention the Bitcoin for Advisors podcast, which Morgen hosts and Pierre assists, just like I do with Jesse. So maybe we'll get to talk about the fascinating world of podcast hosting, co-hosting, and assisting. Even with that introduction, I'm sure I missed some great things you're both up to, but it's great to see you today. And thank you for being here. And how are you?
Go ahead. See, this is going to be a problem if he goes first. You go.
Thanks for having us on. It was the nicest introduction I think I've ever received. So I really appreciate that. Thank you, Andy.
Yeah, very kind words. Thanks, Andy. Thanks for having us on.
Well, well-deserved, and can't wait to talk to you. So let's start with your combined Bitcoin journey. And I actually don't mean the story of how you met, though that is a good story. I mean how you've thought about Bitcoin over time. So, for example, I might invoke 3 words: speculation, investment, and savings. So Pierre, what do these words mean to you, and how have you applied them to Bitcoin over the years?
Yeah, so I think that from an Austrian perspective, the word speculation does not have the negative connotation that it has kind of in the mainstream. I think that for Austrians, most things that we do in life are speculative. That is that we're performing an action with a particular expectation about something in the future happening. And so that kind of speculation can broadly kind of go into 2 different buckets. One is taking a risk, And a risk from an Austrian perspective is something where the outcome is quantitative, quantifiable, and ideally that you even have some data that you could have an actuarial model on and be able to model that risk and to have some kind of expected values around that. And so that's one form of speculation is taking risk. And then the other one is uncertainty. And uncertainty is more qualitative. And when I think about speculation on uncertainty, probably the most positive form of it is entrepreneurship or kind of technology, research and development of doing something new, where nobody's done it before, or nobody's done it in the same way before, or with the same combination of resources, such that you can't really build a actuarial model around entrepreneurship and say, oh, here are the probabilities of this person succeeding or not. Though I know that VCs try to do that, and maybe that's their downfall. And so VCs are always coming out with, oh, it turns out that a 40-year-old founder is better than a 20-year-old founder, or vice versa, because they're trying to create quantitative models when it just doesn't apply. And so they're constantly having to correct their investment approach. So that's on the speculation side. And specifically with regards to Bitcoin, Bitcoin's a combination of risk and uncertainty. And so different aspects of the Bitcoin system are uncertain and others are risky. So for example, risky is the purchasing power, right? The price of Bitcoin. And we can have debates on how it should be modeled, how it should not be modeled. But nevertheless, it is quantitative. There's a finite range of values that it can have. And then an uncertainty would be, for example, what would an uncertainty be? Bitcoin has very few uncertainties is actually one of the points compared to, for example, the fiat system. An uncertainty is how much money will the government print, right? Because ultimately that's qualitative. It's going to be decided by humans at the Federal Reserve and in Congress. It's not going to be decided by a quantitative, although they pretend to be quantitative. Whereas Bitcoin's money supply has very little uncertainty because it is algorithmic. It actually is quantitative in the sense of, you've got the halving every 210,000 blocks. And then on the investment side, I think that this is really where folks like Warren Buffett and others trip up, is that they only look at the world through the lens of investment. And they, Bitcoin's complicated for them because an investment generates cash flow. I think fundamentally is kind of the idea of an investment, whether it's a liability or equity, that is going to throw off some kind of cash flow. And Bitcoin being cash itself does not generate a cash flow. It is cash. And so that, I think, is for investors out there confounding, because they don't like the idea of purchasing an asset and then just sitting on it, putting it in cold storage and not earning a yield, not earning some kind of cash flow. That is, and that perspective, I think, is a result of the fiat system, where, yes, indeed, you do want to own assets that generate cash flows. Otherwise, you're just taking on inflation, and you're going to get diluted out of your dollars. So I'll let Morgan expand on that if she wants to, or we can take the next question.
I think you summarized that pretty well. I would say, just to add on the investment piece, like when people are looking for investments, they're specifically looking to grow themselves out of the inflation predicament that they're in. And so for the average person, right, investment is simply that, right? There are obviously expert investors who are looking at it very differently than the average person is. But for the average person, they're just saying, okay, I was told to invest because there's inflation over time, and therefore I have to take the money that I earn, anything that I save in excess of that, and put it into something. And so if they're thinking of Bitcoin as cash, not Bitcoin Cash, but as cash, they would not necessarily be, and if they're looking for that quote unquote cash flow that the investors are always talking about that you're supposed to receive, they're not going to necessarily value Bitcoin properly, as opposed to looking at it as a savings vehicle whereby they can just sit on their money and they won't lose purchasing power over time until they actually decide whether or not they're going to spend it or actually deploy it as some sort of investment. It gives you a lot more optionality to sit on savings rather than to sit on an investment.
Interesting. So I'm going to try and pin you on it, though. So it's a combination of a speculation and investment and savings? Or Morgan, do you think that the savings element or the savings framing sort of resonates most strongly for you?
It's definitely savings. So when I look at it in a client portfolio, yes, we're looking at it in terms of investable assets. Okay, as far as investable assets are concerned, how are we going to allocate to this savings versus these investments? And so I guess it doesn't necessarily pin down exactly what you're looking for here, but it is savings, right? Because the difference is that I'm not taking it and putting it into something that has all of these other extraordinary risks that are associated with investment. I think that we often minimize those risks because it's become so commonplace to use something like the S&P 500 as a savings account. And so we just think, okay, if we own 500 companies and we've diversified away all the issues, right? But we haven't diversified away the systematic risk of just owning investments in general. And so it's all trade-offs, right? So what you're trading here is you're owning a long-term savings vehicle. And yeah, in that long-term savings vehicle, you're going to have a high volatility aspect to that savings vehicle with, the trade-offs of necessarily investing, which comes with a slew of other risks.
Yeah, and to piggyback off of that with the index investing, I think that the main limitation there is that there's not really the kind of oversight that you would expect from the owner of the business. It's so essentially, you're splitting up the ownership among so many different people, and then you're putting so many middlemen between the retail investor and the company and the management, that I think that we live in a world where there should be a lot less investors, right? There should be fewer people making investment decisions, but making better ones, not ones that are based on automations, right? Oh, I'm automatically going to buy more of this portfolio of stocks. I think that leads to capital misallocation, even though people do it for a reason today, right? Which is that it solves a particular problem that they're facing, that their dollars are a melting ice cube.
I think there's an interesting conundrum here where, Pierre, thank you for sort of popularizing the Bitcoin as savings idea. I've certainly run with that quite a bit. I think that is the way that people should think of Bitcoin first and foremost, as savings technology that grows the purchasing power of your savings and happens to do it in a way that outperforms every other asset class out there and historically, and I think, in my opinion, looking forward as well. And that creates this conundrum because, Morgan, you as a wealth manager have to decide how much, or help advise how much of your portfolio should be in this asset class versus this asset class. But we have this problem of Bitcoin might be the most certain, as Pierre pointed out, and the highest performing because of its inherent properties and the certainty that comes with all that. And so how do you, Morgan, and I guess maybe how do you as a pair talk about what is the right way to approach how to allocate or how much to allocate? And obviously it's on a case-by-case basis based on the circumstances of your clients, but how do you guys think about that? And specifically you, Morgan?
Yeah, so the number one thing that you need to look at is spending. People don't like to do this because spending is the least interesting part of Bitcoin, right? Most people think, okay, I just buy Bitcoin and then I can get out of jail free, basically. I don't need to worry about how much I'm spending. I don't need to even worry about how much I'm saving. I don't need to worry about how much I'm going to need in the future because I'll just buy this asset, Bitcoin, and then in the future, it'll go to the moon and then it'll solve all these other financial planning problems that I otherwise would have had. And it's just simply not the case. On a case-by-case basis, every time a client comes in, the first thing we look at is net worth and spending. And the reason why is because net worth and spending dictate literally every single aspect of personal finance, down to how much Bitcoin you can even own. Because if you don't have something so like menial is just an emergency savings account, you can't even buy Bitcoin, right? Because you will be selling that Bitcoin should an emergency come up. And so, like, not to get too deep into the weeds with specific, examples on people, but if you're looking at spending, right, if you're looking at how much you're spending over time, how much money you have coming in, how much money you have going out, how much you're actually saving, and you're sort of projecting out into the future your ability to either save or when you're actually going to need to spend this Bitcoin, right? Then from there, you can make asset allocation decisions based on how much I want to have in savings versus how much I want to have in investment. And so because there's so many different factors that go into all of those ideas, right, it's really, really hard to give a specific number to people about how much should they allocate and how much do they need for the future, right? Because all of those things are going to depend on how much they spend and how much they've saved. And so for a person who, let's say they only spend 50 grand a year, they're going to need a lot less than somebody who's spending $500,000 a year, right? Those numbers they're nowhere close to each other. And just projecting that out over many, many years, right? You're going to need just exponentially more money to keep up with $500,000 worth of spending versus $50,000 worth of spending.
Yeah, that's helpful. That's helpful framing. So one of my personal, realizations over time, I guess I'll say, is I've just become more comfortable with Bitcoin and a sizable portion of net worth in Bitcoin with time. And what I haven't figured out is whether that's a change in my investment thesis, quote unquote, or it's more about comfort and having lived through a couple of market cycles. Do you have any thoughts about that, Pierre? Do you think that over the years, your investment thesis has changed, or your thoughts about why to hold Bitcoin have changed quite a bit? Or has it been more of sort of an evolution of your comfort level increasing? Or were you always very comfortable?
Yeah, well, I mean, I think at first it was like, okay, I'm in my early 20s, let's call it. And I also, it's like ideological, right? Of, oh, I'm buying Bitcoin to protest against the fiat system. And so it doesn't really matter, any kind of question about allocation or returns or things like that.
Or responsibility.
Yeah, exactly. And now, though, I think that now it's like, okay, what if I was not holding Bitcoin, or if I was not allocating capital to Bitcoin, what are the alternatives? What would I allocate it to otherwise? And how do I evaluate those on their merits? And that's where, I go back to Mr. Saylor's, there's no second best. Because even on the consumption side, it's like, do you want to buy a sports car that then you have to maintain? And does it really incrementally increase, your enjoyment of life or your utility? And for some people, that might be the case. For me, like, I'm not a car guy. So I think just in general, like, I don't really have particularly expensive tastes when it comes to consumption. So it's pretty easy for me to be like, okay, well, I don't care about what the Bitcoin price is because I'm not looking to cash out or anything like that.
Yeah, that makes complete sense. When you're in your early 20s, the good news is you don't have any capital to allocate anyway, right? So
yeah.
Who knows? Maybe you secretly had made a fortune in your teens, but absent that kind of scenario, unlikely that the stakes are very high.
No, and quite the opposite. I mean, going back to what Morgan was saying, that, I paid off my student loan debt after graduating before, acquiring more Bitcoin. And, hindsight 2020, if you did the math, it's like, oh, wow, that was not a good move. But I think that's only with hindsight. And if we think about financial planning as like a set of best practices, there is a best practice of, hey, pay off your debt. Put up, an emergency savings account of, 6 months of expenses, and then you're ready to start allocating to Bitcoin. And I think for Bitcoiners, it's like the immediate reaction to that is, well, first of all, that's an infringement on our freedom, and Bitcoin doesn't care about my debt, and I can do whatever I want. And that's true. Bitcoin gives you that freedom. Bitcoin gives you the freedom to go 100x leverage and to get wrecked, right? You can absolutely destroy all of your capital by using Bitcoin, sending it to a burner address if you want to, right? And so when I think that the kind of the narrative around Bitcoin of, hey, it's freedom money, has to be balanced with the fact that with tremendous freedom comes tremendous responsibility. And if you misuse Bitcoin, you might be thinking that, hey, you're sticking it to the maxis, right? Oh, I'm doing this because, other people don't like me doing this or whatever. But the reality is you're only hurting yourself, right? You're just destroying your own capital. That I think is something to reflect upon.
To circle back also to what you said about best practices, best practices don't necessarily mean best outcomes. And I think that people misconstrue that because they think, okay, well, in the best outcome, right, I don't have the emergency fund and I don't pay off my student loan debt that has high yield and I don't pay off some consumer debt because Bitcoin's going to go to the moon and I'm going to get, and it's going to get inflated away and it's not going to matter, right? And that might be true, let's say in 10% of the circumstances that happens in Bitcoin, right? But then there's maybe the other 90% of circumstances where it doesn't actually go exactly according to your plan, in which case there's a reason why there are best practices. It's like, it doesn't necessarily mean that always the best practices are going to cause the best outcomes, but most of the time they will. And that's why we have these procedures in place to help protect people so that they're not thinking about themselves as retired before they're actually retired, right? If you're already spending all your capital before you've actually accumulated enough capital, right, you're never going to retire. So there are a lot of little steps that you have to take, little financial planning best practices that are there to save you from yourself.
Yeah, that's very well said. And I want to loop in a question from or really a comment from our mutual friend, Jim Kreider, which his comment is, don't underestimate how long gradually can take, but also don't underestimate how fast suddenly can happen. And of course, he's talking about Bitcoin, let's say, reaching its potential, or perhaps the value reaching a higher order of magnitude, a significantly higher order of magnitude than we're seeing currently. So what are your latest thoughts, both of you, on timing? Do you think about or do you plan based on an expectation of where Bitcoin's price could go, let's say, over the coming few years? Or do you set a very wide range and just kind of sit back and wait for it to happen?
I think general rule of thumb is after anyone buys Bitcoin, the price immediately goes down.
Mm-hmm. Yeah.
And that's happened to me. That's my experience.
Yeah. I don't know who's on the other side of these trades, where they're like,
we're always on the losing side.
Yeah, but I'm definitely always on the losing side. So I think that this is where Matt Odell's, stay humble, stack sats is really critical, because the humility is knowing that, hey, look, Bitcoin is volatile. That's like the number one people say thing about Bitcoin is it's volatile. And yes, that is true. Bitcoin is volatile. And therefore, when you think about being in the market or, staying invested and kind of that mentality, it's critical with Bitcoin. In particular, there's analyses that have been done that essentially say, okay, let's assume you missed the 10 best days of Bitcoin over the past year. And then they show that you have zero returns, right? It's kind of, the returns are concentrated in particular time windows. And the humility is recognizing that I'm not going to catch that. I'd say 99.9% of people should not be traders, or are entirely unqualified to be traders. And then the remaining ones should not be traders for other reasons other than they're, they can be skilled, but it's probably still not the best use of their time. And so that's where you have to approach it from the financial planning perspective, which Morgan will get.
To add to that, I would say too that people have this price expectations around the halving. And so, right, the problem with having price expectations around the halving is that it's like counting your chickens before they hatch, if you're already deciding that, okay, my stack is going to be worth between 10 and 100x what it is today. And therefore, on May 25th of 2025, I'm going to be able to do whatever I want, flip off my boss, go take my kids on a trip around the world, right? If you're planning all of these things in advance of actually getting that 100 to 150x return that may or may not happen, right? The problem is that, like, people start to live in the reality in which they're thinking in, right? And you have to live in their current reality. And so I tell Bitcoiners this all the time, because Bitcoiners always say, okay, well, in the future, there's not going to be an IRS, and therefore estate planning doesn't matter. IRAs don't matter, right? You name it, it doesn't matter. I don't need to do any of that stuff, because by the time people actually inherit my assets, the government will cease to exist, and I will be living on my little seasteading thing or whatever they're going to be doing, right? Except that that's not the current reality, right? The current reality is that they live in Maryland, and they might pass away tomorrow, and they haven't done any sort of planning whatsoever. They didn't take advantage of the 401k match that they have, where they could have gotten 100% return. They didn't, take deductions along the way. They didn't do any of the things that they could have been doing, where they actually could have been stacking more Bitcoin. And, whoever would have received their Bitcoin actually doesn't even know where it is, because it's in some treasure map that got lost, right? There's all these things where if we are planning for a current reality, then we are going to make good decisions. And if we're planning for some future reality that may or may not pan out, then we're going to make bad decisions. And I would say that's true about whether it's in Bitcoin or whether it's in any sort of traditional finance, right? People do this all the time with estate planning. They think that they can game the system or somehow, pass money to their heirs without worrying about estate planning taxes. And then the rules change, right? And then they get locked into these trusts and other things that they should have otherwise not have done because of the estate planning rules. And so my number one thing that we tell our clients is we need to plan based on what is happening today, and we need to have long time horizons on these things. If we're thinking about using our Bitcoin in the next, 18 months, then Bitcoin's not the right savings vehicle for you, right? We need to find a different way.
Yeah, I'd say you'd have to have a time horizon of at least 5 years of, okay, I've acquired this capital, whether it's a bonus or an inheritance or just your, biweekly paycheck. And then you have to look at, okay, if I put $50 into Bitcoin, could I hold that for 5 years at least? And if the answer is no, then as Morgan said, that's not going to be the right path forward for you. And vice versa, right? If your circumstances have changed and you are holding a large amount of Bitcoin, it might be time to reevaluate your emergency fund and convert some Bitcoin into fiat in order to, make sure that you have what you need. And so in a way, it's not so much that you're buying and selling Bitcoin based off the price chart. You're buying and selling Bitcoin based off of your cash flow and your balance sheet and your income statement. It's very intrinsic to your circumstances rather than extrinsic to what's happening in the market.
But there's also that element that you talked about before of the certainty that may or may not be there and I think that's maybe the trap that we fall into when we project forward past a halving, and there's certainty about what will happen in terms of the block reward, but there's not necessarily certainty about what it will mean for the price of Bitcoin, and those things can cause us to be overly optimistic or at least overly certain, more certain than we actually can be about what's possible. And I'm certainly guilty of this. I fall into the problem of, like when talking about portfolio allocation, BlackRock did their little analysis and came up with the optimal allocation of 87% to Bitcoin, which is, some low-level analyst at BlackRock doing that, I'm sure. But, that's the historical outcome of what has happened, but that's not necessarily what will happen. And I think that 5-year timeline, though funny enough, that 5-year timeline could introduce volatility, depending on if it is a 4-year cycle and you buy at the top and then you sell a cycle and a year later at the bottom, it could actually come out the wrong way. So
I'd like to go on the record that I'm longer than a 5. 5 is I think 5 is short. I think Bitcoin's 10 plus years, kind of asset, where you've been through multiple cycles, not necessarily one. And the other thing I will say on that is that Bitcoin, if it's a large portion of your portfolio, is going to be the dominant driver of returns, both to the upside and the downside on your portfolio. And so I think that people they look back at the returns, right? And they say, okay, if I had bought, let's say in 2014, and then I held over the last 10 years to today, then I would have been able to stomach it, and I wouldn't have rebalanced, and I wouldn't have anything, right? and it would have been the main driver of my returns. I would have, had, I don't even know, X number of percent, is it 6,000? Or I really don't know it off the top of my head. But the problem, right, is that because that volatility is both to the upside and the downside, if you are not committed to just holding through and that being a long-term asset that you're willing to hold for 10 plus years, right, then you aren't actually going to experience that being the main driver of returns. And so I've been looking into this quite a lot now, because we're starting to look at what are reasonable safe withdrawal rates for people who have concentrated Bitcoin positions. And we're talking about, people who are holding 40% or more of their assets in Bitcoin. And because once you're at that 40% number or higher, Bitcoin is the main driver of returns. And therefore you have to be conscious of, okay, how much can I actually pull out of my portfolio at any given period of time without risking my whole portfolio, in the future, and then I actually have to go back to work or so forth. So those safe withdrawal rates are very different than what people think of typically in the fiat world. And that 4% number is generally what people are looking at. And I unfortunately don't have all the answers for this podcast, but I think it's just it's an interesting thing that people are going to be working on going forward.
That's a super interesting topic. Are you finding that it varies, or that it's a more conservative number or a higher number, or just kind of ballpark?
Yeah, so what happens is that, so the way that, I guess for the listeners, right, there's this study that was done by Bill Bengen whereby you can take, basically what he said is over 30-year periods of time, you were able to withdraw a safe withdrawal rate of 4% of that portfolio. At the end of every single year, you would basically mark to market the value of your portfolio. And then throughout the year, you would be able to take out that value until the next 12/31 valuation date, where you would reassess how much you can take out. And so what we're finding is basically that because Bitcoin is so volatile, the withdrawal rates are, even if the withdrawal rate is very similar, right, the amount that you can take out varies wildly. And so for most people, it's going to be they have very unexpected ways of predicting what their fixed expenses can be, unless they're willing to basically have kind of muted fixed expenses and then have varied, discretionary expenses over time to make up for those years where you have a huge change in your portfolio, right, and then a huge down draw in your portfolio, and that's the driver of returns. And so without actually being able to give you hard data, because I'm not totally through all the data, that's what I'm finding so far, is that just the withdrawal rates are so wild that it's actually going to be hard for people to plan around those.
Thanks for tuning in. If you're interested in exploring any of these topics further, or want to learn more about how we can help you secure a new or existing Bitcoin allocation, get in touch with our team at onrampbitcoin.com. We look forward to supporting you on your Bitcoin journey.
Yeah, I think the time horizon, going longer than 5 years, talking about maybe 10 years, I think to my memory, the classic timeline for holding stocks, right, for having an equities portfolio is having something like at least a decade investment time horizon, partly perhaps because you get a business cycle, right, and you get a bear market in equities every decade at least. And so you have to be able to not be drawing on those assets, right, in the downturn or at the bottom. Good news, I guess, is that the cycle so far, good news, bad news, is the cycles in Bitcoin have come more frequently. I'd like to turn, actually, Pierre, to your work in the mining business now. What are the analogies, perhaps, when it comes to capital allocation and budgeting? I mean, I have to imagine if you are a Bitcoin mining operation, you face a lot of these issues as well. Of course, you have the halving, which complicates your life, but still you got to live through a couple cycles to survive. What are there any parallels to the personal behavior and budgeting and balance sheets and activity, or is it a different beast entirely?
Yeah, it's a little bit different in the sense that one could think of buying a mining rig as kind of committing yourself to DCA for a particular period of time, of hey, I'm going to DCA for the next 4 years. And, I think that the biggest challenge in the mining industry is one of the biggest strengths of the Bitcoin system, which is that it's a dog-eat-dog, hyper-competitive industry, in the sense that around the world, everybody is producing this same commodity, SHA-256 hashes, and they're competing for the same fixed pie of rewards. And so it really is about who can find the best sources of energy, and then who can operate these facilities in the best way to accomplish that DCA, and to do it with margins, right? Such that, okay, I could go on an exchange and I could DCA for the next 5 years, right? Will I have a higher cost basis of acquiring those coins versus buying a mining rig today, and then kind of looking at the cost basis there? And so I think that there's a lot of different business models that work within the Bitcoin mining industry, but I think that's kind of where the parallels end. And I would just highlight, Bitcoin mining is an investment, right? Because it generates a cash flow of sats. And that's how it should be thought about. Happy to elaborate in any direction there, but it's a fascinating world.
Yeah, well, I'd love to learn a little bit more about the mind of a capital allocator in a Bitcoin operation. You mentioned one of the factors you mentioned was operations, basically operational excellence and efficiencies in operations. Does that mean sort of skunk worksing, kind of trying different methods for organizing the rigs within the data center, for locating them, for doing immersion cooling versus air cooling? Does it seem to pay dividends in the long run, or does it seem to have an investment payoff to try a bunch of different stuff? Or is it better to be a fast follower, better at copying somebody else's innovation, or is it a combination?
Yeah, that's a great question. So I think that throughout the industry, people are doing experiments. They're trying out different technologies. There's new vendors coming out with different offerings all the time. I do think that it is necessary to engage in that in order to then be able to scale it. I don't think that there's going to be a lot of success from copycat like fast followers because they don't accumulate the right tacit knowledge that comes with actually experimenting with the different technologies and how they come together. And so there's so many different moving parts to a Bitcoin mining facility at scale that if you just try to copycat, you're just going to end up missing one of those pieces and then repeatedly stubbing your toe, right? So I think that anybody who wants to get into the Bitcoin mining industry should probably start with like one mining rig and then go to 2 and then 10 and then 100 and then 1,000 and then 10,000 and then 100,000, right? If you try to go straight to 100,000, you're definitely going to be banging your head against the wall or worse, getting electrocuted. So I think the operational excellence isn't just limited either to kind of the physical reality of electrical and cooling. It's also related to the financial operations of how are you financing this business in order to withstand Bitcoin's volatility, right? Mm-hmm. You have to have the right capital structure. I mean, if you go all in on debt at the top of the market, you're going to be upside down, right? And you're going to have to go through a bankruptcy process that's going to be expensive and a big distraction, as well as not just from financial operations on the capital market side, but also on the electrical market. Because if you're mining Bitcoin at scale, then you are a large participant in the electricity market of the local grid, or you're producing your own electricity, and that comes with its own can of worms. And so I think that from the cost of electricity perspective, I've seen, and just speaking for myself, not for Riot, but I think that most people at Riot would agree with me on this, is that your cost of electricity is going to have a huge influence on what your margins are going to be as a Bitcoin miner. And so if you try to mine at home with like a residential cost of electricity, at best, you're going to break even. And that's really, in the most optimistic, rosy scenario, is you're going to break even at home. What would be more interesting is if you reuse the heat to heat your pool, for example. Now you might be coming out ahead. But that just shows that if
but
you're
not because you're coming out ahead, right? But because you have made use of this, right?
and then
like you don't net
have two
better just because
applications
you
all of a
heated your
sudden.
pool. Sorry, to
right.
interrupt
No,
your
no, I
canned
agree
thought.
with you. But the other thing
But
too,
you do get to enjoy a nicely heated pool.
and I don't think you come out ahead from if you're billing your hourly labor, right? If you do that, then you realize that you sank a ton of time building a custom pool heater when you could have just bought a pool heater and not. So it's kind of more of a hobby. I know that some folks might not want to hear that, but at the home scale, if you have solar, if you got a situation, maybe you've got something to work with, but at scale, you have to be thinking about how do I participate in demand response? How do I keep an eye on the electricity market to be curtailing actively? How do I negotiate long-term power purchase agreements with electrical companies such that all of the economics work from that perspective? So I think that it's a combination of managing a lot of different pieces and including real estate, right? Where is your facility actually sited? In construction, how are you building your facility? Who's pouring the foundation, et cetera? And lots of engineering, from civil engineering to mechanical to electrical to computer science, right? If you got to have the software that's going to manage the facility, and all of that does amount to a pretty significant entrepreneurial undertaking.
So I think thank you for that overview. Very helpful, Pierre. I think what I'm hearing is that there's not going to be a chapter in your upcoming book, Morgan, on swimming pool immersion cooling and tactics for generating income or savings. But maybe you could tell us what is coming, or at least one or two nuggets in your upcoming book.
Yeah, definitely. So I wrote a book, like you mentioned, about 4 years ago now, which is kind of crazy. The time flies. But the book is it's a comprehensive personal financial guide. And what I found was that I was getting a lot of Bitcoin questions, right? But my guide doesn't necessarily answer those Bitcoin questions. And if you go out into the market, there really isn't there's really a dearth of financial planning content for Bitcoiners to access. So what Bitcoiners need to do now is take current financial planning principles and apply them to their personal financial situation. And for most, right, that's going to be really difficult. If you're not kind of fluid already in financial planning concepts, taking them and then applying them specifically to your Bitcoin situation for most people is going to be difficult. And so the book is basically that I'm writing is to help people take current, tried and true best practices in personal financial planning and apply them to portfolios that are 40, 50, 60% Bitcoin, because that's basically what we're seeing now in my practice. For the most part, people who are coming in are longtime Bitcoiners who they've been stacking for a while. They're not sure whether or not they're like how much they've amassed is enough, right? Like that question you were asking me earlier, like how to assess how much is enough? How much should I be saving? How much should I be putting in Bitcoin versus other assets? How much do I actually need to retire? How do I need to be thinking about these withdrawal rates that we were talking about earlier? So all of these are, I think, key components to making sure that you have a solid financial footing in regards to this new savings technology that people really have not broached these subjects before, just because for the most part, right, people have been saving in a currency that has not had all of the attributes that Bitcoin has. And so this obviously it gives people a lot of freedom in how they save, right? Because now they have a new place and a new way of doing it. But it, like Pierre was saying earlier, comes with the responsibility of figuring out how to do it for your situation the best. And so that's my hope with this book. And I am admittedly behind on writing it. I'm not as far as I had hoped, but I am like a good third of the way through at this point. So we're getting there. It's going to come out. My hope is that, sometime this year, but Pierre hates when I promise these kinds of things because then it locks me into doing the work.
It doesn't lock you in. I mean, there's so many pre-sale promises that have been delayed in this industry that as long as you deliver at some point within the next couple of decades.
Yeah. In the meantime, no, I always do personal research and writing. And so there are other things that will come out that are related that will eventually, be fully fleshed out in book form.
I think I'm hearing that we need a white paper for the book. in the interim period, just to slake people's appetites here.
Sometimes the only way to
book tokens.
Yeah, book tokens. There we go.
that's the way to go.
Not a scarce
sometimes the only
asset,
way to
but
get
it might work.
I can only finish writing if I have a deadline. So sometimes that painful deadline is what it takes.
Yeah, for sure.
The book is coming out on March 1st. So we're really excited to be launching the book.
Yeah, that'll be soon. Maybe you can launch it at May 2025 at the peak that you already predicted and put on the record there, Morgan.
That sounds like a perfect plan. Well, you obviously, Pierre, have managed to function in your role as assistant with respect to the Bitcoin for Advisors podcast. So, maybe there needs to be an assistant for the new book who needs to assist with the writing.
We tried that.
Yeah, we did actually try it. Pierre was supposed to be writing the first 3 chapters of the book because I thought that people would get a better perspective on Bitcoin and money and the Austrian perspective of everything. But Pierre has also fallen behind.
Yeah. Just trying to heat the pool.
Yeah.
This is a layer I had.
The one thing I will say about the
anticipated.
pool heater thing, so it's the pool heater, the garage heater, and so forth. The one benefit I've heard from people is that it actually gets your wife on board if you have a Bitcoin miner that heats a space that otherwise would have been totally cold. Is that now your wife is thinking, oh, this Bitcoin thing is actually pretty useful because now my pool, which normally would have been 60 degrees, is a nice 92.
Well,
year-round warm pool. That's pretty good.
I think pitching the benefits of Bitcoin to the spouse has been something that all of us have encountered here in this conversation. Some more than others, but there's no doubt that the adjacent benefits have to be understood. And I sometimes wonder. One of the questions that's top of mind for me is, what % of people will ever understand Bitcoin? I see this with family members. I see this with friends. I'm just curious. What do you both think about that? And obviously, that's not to say that any of us fully understands every aspect because it's a complicated phenomenon. But are we gonna get there? What % of minds are gonna actually wrap themselves around this thing?
Well, what percentage of people understand cars?
Yeah, good question.
Well, I would also say, to add to that, so if you had asked people in the age bracket of, let's call it 55 to 65, so 10 years ago, if you had asked them if they would be able to very easily use their phone to go on the internet, right, to buy, socks for their nieces or grandnieces or whatever, right? They probably would have looked at you like you were insane because they didn't know that their phone even had that capability, whether they could even do something like that, right? Whereas fast forward 10 years today, right, we have people who are 65 to 75 who are very easily using their cell phone to buy things online or to interact with their friends on Facebook or whatever it is that they're using their phone for, right? They may not be able to use every single app the way a 25-year-old can, but they have figured out sort of the basic things that they need to operate on their phone to make their day-to-day lives work. And so I think we often focus on that older group of okay, they're not going to be able to do it, and so therefore this whole experiment is going to fail. They're not able to do it today because it's not commonplace to use your phone to do a Bitcoin transaction, but it is becoming commonplace to tap to pay with your phone, right, in certain places. And so maybe a 65-year-old person 10 years ago couldn't do that because that wasn't something that was even available to them. But today, right, they're starting to learn, or somebody in their family has taught them how to do that. And so I would say that applies across all demographics, right? The more that this technology is around and the more that people are exposed to it, need to use it in some capacity, and have easy ways of learning how to do that, the more likely that people will actually be able to do that. And then there's always going to be a subset of the population that, just still wants to use their horse and not their car, or still wants to, use their typewriter and not their computer printer, right? So, I mean, we can't say that there's not going to be vast adoption just because 5% of people are still using a typewriter, right? I would say that most people are using a computer at this point. It's probably not even close to 5%. I'm just throwing numbers out there, so don't get mad at me on Twitter. But I'm just saying, from that perspective, right? The longer that a technology is around, the more likely people are going to try to use it, and the more likely people in the future will actually be able to use it.
Yeah, that's it. And getting to your comment about who understands their car, Pierre, I understand two things about my car. One is that my primary vehicle is literally falling apart, and I have to replace it. And I don't know how to fix it myself. There's no chance I would ever understand what's going on under the hood. And the other thing I understand about it is, to your much earlier comment, which is I have no desire to spend any more on its replacement than I have to, because it means, it would mean at the margin less savings or less cash into investable assets, including and especially the investable asset that I see has the highest risk return potential.
Yeah, shout out to the check engine light gang on Twitter that is very proud of their check engine lights.
I hope you know what gas to put in your car, Andy.
Yeah, that I've got figured out.
It's funny. I did put out a tweet of it was a picture of a gas station pump, and I was like, "There's no way this is going to go mainstream. Nobody understands what any of this means." 93, 85, what are you talking about? And yet here we are.
Yeah, you're right. It's amazing.
I always think about the Henry Ford quote of, if I'd asked people what they wanted, they would have said faster horses. If you ask people what they want in money, they'd say more dollars. We don't need more dollars. We need better money that grows in purchasing power, money that is savings technology. That's what we need. And I think, Morgan, to your point, people will figure this out, whether it takes a few generations or a long enough timeline of human behavior playing out to prove that the winning strategy was to save in Bitcoin and use that as your savings vehicle. Eventually that osmotically trickles, through the population and becomes accepted wisdom, in the same way that currently the 60-40 portfolio is the accepted wisdom because of 40 years of declining interest rates bearing that out as the winning strategy.
I would also say the more invasive the banking system becomes, and they were becoming even more invasive than ever before.
Let them know what happened.
So I was trying to send a Zelle transaction for our child's school, and it got blocked. And then I tried to send it again because I just thought that the system was being stupid. And then not only did it get blocked, but they actually locked me out of my Chase account. And so I had to call Chase basically to get my account unlocked and also to send this Zelle payment for my kid's school. And they proceeded to ask me 6 questions right off the bat, which I felt like were very invasive. And I had answered enough about the fact that this was for my son's school. And then the woman said, "No, I'm not done. I have more questions to answer for you to answer." And I was like, am I having a colonoscopy right now? What is happening? Is this just a small transaction going to my son's school? I'm telling you that it can go there. You're speaking to me, the client on the phone, affirming that, yes, in fact, I want to send this. You have released your responsibility as far as this transaction is concerned. But no, they want to protect people from fraud, or at least that's what they're saying, right? We want to protect you from fraud. We want to get as much information about this as possible. And our point was basically that if I said multiple times that I want to send money to a Nigerian prince, and they tried to dissuade me of it, but I kept insisting that I send money to a Nigerian prince, then that Zelle transaction should in fact go through. It's my fault that I sent money to a Nigerian prince. And so I just think that the more that this kind of thing is happening and the longer that something like Bitcoin is around, the less likely people are going to want to use dollars, because they don't want people in their business all the time, right? It's kind of crazy that they have so much data about what people are doing, right? You can basically just pull, we do this for clients all the time, right? We pull all their transaction data and we put together an income statement for them. And we know a lot about a client because we go through all their transactions, right? And put together that income statement for them. And that's just because I'm doing that as a financial planner and I'm trying to help this person, not because I'm trying to, screen police as much information from this person as possible so that I can then cut off their transactions to certain places and force them to send transactions to other places, right? And so forth. And so I think that the more that the banking system becomes invasive and the more people want to get involved, the more something like a CBDC happens, right? The more the government kind of gets their hands on it, or big banking gets their fingers involved in these things, the more likely people are going to not only opt out, but they're going to figure out how to use the new technology very quickly.
It's kind of funny because sometimes they put on restrictions with regards to buying Bitcoin, right? So they don't want you transferring dollars to a Bitcoin exchange. And I feel like that is the Streisand effect. It's basically, you're highlighting what the value proposition is here, which is that they control your money and you don't control your own money. And so the more Bitcoin succeeds, and the more they freak out over it and try to stop people from buying it, the more they're advertising what the use case is, what problem Bitcoin is solving.
This happened to me in 2018. I received a wire from Kraken, and Wells Fargo terminated my long relationship with them because of this wire from a crypto exchange. Not only that, but they also they said that it wouldn't impact my safe deposit box with them, but a month later, I found out that they had drilled my safe deposit box as a result of that.
Wow.
Oh, wow.
Yep, that was a very scary day. But yeah, that's part of why you set up your security and your storage in a safe, redundant way.
It is amazing how much custom and how much business the banking system has maintained, despite behaving so badly over such a long period of time. And I suppose it's because they have been the monopolists, the incumbents, and people just haven't really had a credible alternative. And many of us are pretty interested and excited that Bitcoin can play that role. I don't know if it'll be commonly used for that role in the United States anytime soon. Of course, we know that it's happening globally in countries with much weaker currencies that debase much more rapidly. But yeah, it seems like the behavior of the banks, they just keep doing it to themselves, right? They just keep shooting themselves in the foot, both with respect to customer service as well as their broader activities, whether it be facilitating money laundering or crime or what have you. I still have to answer the question of what. Wait, isn't Bitcoin for criminals? No. Here's the Chainalysis report. No, we don't like Chainalysis, but yes, we like that they have nice data for us to send our clients to dissuade them of this old trope that Bitcoin is for criminals when really more of the criminal activity goes through the existing fiat system.
Yeah, and on that, it's fascinating to me to look at the government auctioning off Bitcoin, right? Because it raises so many questions. I mean, first of all, somebody is buying that Bitcoin at the auction. Are they a criminal? Should the government arrest anybody who bids on the auction? Because that's kind of seems to be the thinking there. And then second, if Bitcoin itself is inherently criminal, then the government should be destroying the Bitcoin, right? Just like they would with, if you find crack cocaine in the White House, just laying in a bag there, then you would destroy that. You wouldn't
purely
auction
hypothetical,
it off,
hypothetical scenario.
Purely hypothetical.
Maybe they do auction it, but they don't tell people.
Yeah, Hunter Biden won the auction. Everyone.
You got to make money. You got to make money somehow, right? You can't make all your money serving on boards of foreign companies.
Pierre, we have a deficit in this country. We gotta auction these things off.
Yeah. So and then the other thing too is that if they're like, well, Bitcoin doesn't have any utility. I mean, the government is using Bitcoin, right? Because they are currently holding Bitcoin. And it's increasing in value, so they're doing well for themselves because they haven't auctioned it off yet. But then the hilarious part to me is that they're selling Bitcoin to acquire an asset that they can create for free. That part is mind-boggling. But obviously, it's just I call it a spite auction, right? They want to sell Bitcoin to spite Bitcoiners, which is not going to have positive results in the long run, but probably feels good in the short run for them.
Probably does, and for the moment, it seems like they can afford it. Somebody's buying all this treasury debt, all these T-bills and these notes and these bonds. Who knows? This year, long-dated bonds might even be a somewhat scarce asset if they start printing or keep printing more of those shorter-term bills instead of terming out the government debt. They're just rolling, borrowing on a 13-week maturity basis. It doesn't sound like those guys running the Treasury have thought about the safe move of terming out their debt structure like a responsible individual might. And
then they go on about how payday lenders are predatory. It's like, Well, I mean, what's going on in the Treasury market? Eventually, you'll get to a point where it's a 2 week, or 1 day. Everything's 1 day, day to day. We're gonna roll our debt.
That's it. That's it. That might be the direction we're going. Well, this has been a really fun conversation. We covered a lot of ground. I want to make sure, though, that you each get to leave us with any parting thoughts or anywhere you'd like to send people online to learn more about what you're up to.
Me?
Yeah.
Okay.
Yeah.
So you can find me on Twitter. I'm at Morgan with an E Rochard. My financial planning practice is originwa.com. We deal predominantly with people in the U.S. We've been getting a lot of outreach from people abroad, and unfortunately, as much as I would love to help people abroad, I simply don't know enough about tax and estate situations abroad to truly be able to help these people. And so people have said, oh, you don't want to deal with me. And it's no, we do want to deal with you. We just can't provide like the full plethora of services that I would normally provide in my financial planning practice. So if you are somebody international, feel free to reach out, but know that we're going to try to help you find somebody internationally instead of working with us domestically. I also have a consulting practice called Money Owners. People can find me there if they've got some one-off Bitcoin questions. Nothing like investment advice or investment related there, but I do get a lot of questions about estate planning and custody and sort of those sorts of things. So if you've got some questions about that, feel free to find me there. And you mentioned we have a podcast that is long overdue for an episode, but we did this instead. So everybody can listen to this episode.
Well, we're honored.
And then eventually we'll do a Bitcoin
to fill that role. Yeah, we're happy to fill that role. What about you, Pierre? What else you got going on you want to tell people about?
Yeah. So my DMs are open at Bitcoin Pierre on Twitter, and I subscribe to our podcast. I've got a couple of other podcasts. The podcasts are abundant, but I think it's great.
Not
because
scarce. They're not scarce.
Yeah, except for podcasts with Pierre Rochard are more scarce than most and more valuable in my humble opinion. So people should definitely check them out.
Scarce under the noted label, I would say too.
Yeah. I got to talk with Michael. We're in a bull market now. We need to be putting out content.
Yeah, get to work, guys.
Yeah.
I've been seeing him revive some of his old video clips, which are very fun to always watch on a green day.
Yep, absolutely. Thanks for having us on.
Yeah, thanks for having us.
Yeah, it's been a real pleasure, real honor. Thank you both, Pierre and Morgan. Tremendous conversation. And this has been Scarce Assets.